Hi, I'm Lindsay Reiser. The Federal Reserve is about to announce its decision on interest rates. Even with persistent concerns about oil prices and inflation, no change is expected today, according to experts. Now, the Fed maintains its 2% target goal for inflation levels. CBS 24/7 Mornings co-host and MoneyWatch correspondent Kelly O'Grady is at the New York Stock Exchange. Kelly, we officially know now there is no change. Again, widely expected. Take us behind this decision.
Yeah, so I'm reading it right now. This wasn't unanimous. This was actually a 9-3 split. Remember, the Federal Reserve has 12 voting members. So what that means is 9 of those members voted to keep interest rates steady and 3 dissented. Likely, it said they actually would have preferred to hike rates by a 1/4 percentage point. Now, this was relatively expected. Before going into this, the markets were pricing in a 64% chance that we were going to hold interest rates steady, but a 1 in 3 chance that we were actually going to hike rates, because we do know that members of the Federal Reserve would prefer, some of them, to actually see what we call a hawkish. What that means is for the Fed to be more aggressive when tackling inflation. And in this case, they think that the clear answer, those 3 folks, would be to hike rates. Now, I'm looking at the statement right now. It says economic activity is expanding at a solid pace despite elevated uncertainty. Remember, Lindsay, that word uncertainty always seems to come back with the economy. It says job gains have kept pace with the workforce. The unemployment rate has changed little. Inflation, okay, this is really where they called it out. They called out energy prices, this being the committee's focus. And so what was driving this? Basically, the Fed is saying, okay, most of at least the folks on the Fed, job market is okay. We really need to focus on inflation. It does not warrant an interest rate cut, but things are not so bad that we need to hike rates right now.
How common is dissent among the board?
It's becoming more common. A few months ago, I would have said to you, wow, you never see more than one person dissent. And over the last handful of meetings or so, it's really been, 1 to 2 dissenting. Last time was a unanimous decision, but this is becoming more and more common. Now, Federal Reserve Chair Kevin Warsh, this is his second meeting, at the last press conference, he called it a family fight that the Federal Reserve is going through, that there's healthy discussion. I think what's going to be really interesting in this press conference at 2:30, if we hear him indicate that maybe that family fight has become more of a family blow-up. Now that we have 3 dissents, that sort of shifts a little bit more. Now we're thinking about September. If you continue to see these energy prices rise with all of the instability in the Middle East, there are some folks that I'm talking to that say that an interest rate hike would be warranted come September. So I'm really curious to see what that discussion was like. Warsh may not really pull back the curtain, if you will, but I can tell you for sure he's going to be asked by reporters in the room.
Yeah, and we know that this goes against what the president wants. The president and his administration, they want to see lower rates. And so how does that play into the economy? Obviously, they're supposed to be operating separately. And also, are we really expecting to get a lot of answers from Warsh? Because last time he said he wasn't going to be reading any tea leaves for anybody anymore.
That's right. He was pretty much like, we shouldn't be talking about interest rates in the future. We shouldn't share predictions because things change so quickly. And actually, to be fair, a lot of investors and economists were in agreement with him because it can move the market so much. In terms of how the president might react and this question of Fed independence, you want the Fed to continue operating independently versus having political pressure, because any person in power would want to lower interest rates, right? That's what's popular with folks, consumers in the economy, because we all want it to be cheaper to borrow money, especially those of us who are trying to buy a home over here. That being said, I think the fact that you don't see Kevin Warsh voting to lower interest rates, he clearly was one of the folks that voted to keep interest rates steady, I would take a gander, that independence is not really in question. Again, we don't know what the discussions were behind the closed doors. We'll get the minutes, the readout of what that discussion is in a few weeks from now. But I can imagine that the president is not happy to see the decision today.
Well, and you mentioned why the president and why some consumers might want to see those rates lower, but also take us through the importance of the rate in its relationship with inflation, which has been persistently sticky.
Right. Okay. So interest rates, this is the tool that the Federal Reserve can utilize to either, one, incentivize the economy to grow or job growth. Because if you think about it, if it becomes cheaper to borrow money, if that interest rate lowers, then businesses, they'll go out, maybe they'll invest in that new restaurant, invest in that new location. It creates jobs. It creates then more money flowing into the economy and more spending. On the flip side, when you raise rates, that's when you are trying to tackle inflation. You want to make it more expensive to borrow money. And therefore, the rest of us are looking at our credit card bills going, okay, maybe I'm not going to go out and buy as much. And then when there's less demand in the economy, that's when prices tend to come down. And so this is the tension that the Fed is dealing with. And it's not just that the president would want lower rates. It's consumers. It's a lot of businesses. It's the market, frankly. Remember all that AI spending that we're talking about? A lot of these companies are borrowing money to go and spend and invest in data centers and whatnot. And that is better for the market when it's a cheaper rate that they're borrowing that money at. And then finally, national debt. We haven't been talking about that for a while, but that is continuing to rack up in the background. When you have a lower interest rate, you are paying less money to service that debt, to pay that interest than you would otherwise. So that's another reason why the president has been advocating for lower rates.
You mentioned the markets. Why the sell-off today?
Couple things. I think there was like a little bit of trepidation going into this Federal Reserve meeting that they were going to hike interest rates. Like I said, it was a 1 in 3 chance, roughly. It's not zero. It's never zero, but that's higher than it's been in a long time. The other thing is oil prices. We have seen oil hover above a 7% increase today for most of the day because the president has indicated he is going to hit Iran hard again. And what happens then? Oil prices go up, that trickles through to inflation. And then what happens at the next Fed meeting, Lindsay? The talk of an interest rate hike becomes louder and louder.
Kelly, you're simply the best. We'll see you back next hour. Thank you.